Liquidity is a concept every trader needs to understand. It's gonna give you a much better view of the market and you're gonna understand why things happen more. I just made a beginner's breakdown video on what liquidity is and how to understand it more. Watch this video for the full breakdown.
If we take a look at the market from a different perspective now, where it's trading at a support, many traders looking at price at this current time would have been probably stepping in for buys here. But what does the market do? The market actually pushes downwards, taking out those buyers, then creating a big bullish move, pushing price in the initial direction. Why does this stuff happen? In this video, we're gonna break down a concept called liquidity sweeps as it connects and ties into support and resistance. If you're a trader in the Forex market, the crypto market, you're gonna wanna understand a concept called liquidity. In this video, we're gonna break down more of what liquidity is. I would write that down if you're a new trader and are serious about becoming a trader and understanding price more. One thing you're gonna wanna understand is liquidity. So let's break down really what liquidity is before we get started. In the context of Forex trading and also other markets, whether it's crypto and stocks, liquidity sweeps refer to the movements in price that grab orders placed around key levels, such as buy stops and sell stops. This often happens around key levels of support or resistance zones, where traders are more likely to place their trades. A key area of support is a place where there's more buying interest. So when it comes to liquidity, the market knows where a lot of traders are going to be trading. Buy stops are going to be happening at resistance. Sell stops are going to be happening at support. Well, let's go to the chart for a minute and think about it real quick and understand what's going on in the market. Let's go to this resistance level. As you can see here, there's a clear resistance on gold here. What would many traders be thinking here as they see this candle rejecting the resistance level? Probably going in for a short here in the market. If you notice, there's one singular candle. If you notice, there's one singular candle that pushes through that resistance. You got to think of the market now. The market knows there's going to be a lot of traders trading at this resistance level. Think about worldwide, how many people are at home, how many people trade the markets and would be looking at this same resistance level. They would be taking sells here. So anybody who had their stop loss here, that one candle drove price up enough to collect enough stop losses. You would have had to have your stop loss probably way over here, exactly way over here at previous structure to be on the safer place if you were selling at that resistance. So when it comes down to liquidity sweeps, it's a price movement that grabs orders, right? Think about all the sellers here, right? It's grabbing those stop losses. The market does this because the bigger players, the smart money, when you look into liquidity, there's smart money concepts, right? You have your technical analysis, you have your regular strategies and your market structure and everything about trading, but then you have your smart money concepts and understanding more of the psychology of liquidity. If you study smart money concepts more, you'll understand a lot more about liquidity-based concepts. I'm gonna keep it beginner for you guys in this video at a place I think is kind of good to start to understand the psychology of why the market would do something like this. Why would there be a resistance here, right? Most traders, when they look at support and resistance, they might look at something like this, where it's equal, like a double top or a double bottom, right? But when we really look at it, it looks more like this. This is like Google Images in a way. This is like reality of what actually happens, right, in price. So when you look at this and you think about the sense of liquidity, right, why would the market just have this big move up and then create the move? It's grabbing liquidity. It's grabbing orders to do that, right? This happens, right? Liquidity sweeps happen when the market hunts or sweeps orders to grab liquidity. It's going to be typically above a resistance or just below a support. So imagine, just like here, price is approaching a resistance level and traders place their stop loss above that resistance level. The market spikes up, grabs those stop loss orders. It's creating that move so it can create basically another move, only to get reversed, right? only to get reversed in the initial direction that all those sellers would have been thinking the market was going to originally go. So there's a support and resistance connection when it comes down to this. If you look at the support level here, think about this level here. We have a clear level of support that gold was trading into. Right here, price comes to that support level. What does the market do? Does it just bounce off of the support? No, it does not. It actually creates this strong bearish move on one candlestick. So think about what I explained to you guys up here with the resistance as the market was approaching resistance and what it did after. Now the market's approaching a support. So kind of imagine this, similar to the resistance. When price approaches the support level, stop losses are going to be under that support level, right? There's going to be stop loss orders underneath that support level. So this movement that goes underneath price, right, grabs those orders to create that move up. The price sweeps down, triggering stop loss orders and the selling liquidity as well before reversing. That's the sense of liquidity, guys. It takes a move to really create a move in the market. This is a good cheat sheet to study when you're talking about liquidity. Your eyes will get trained more, but I think every trader should write liquidity down in their notebook and understand it more, because it will help you view price differently. It'll help you view the charts, the market structure, and the price action a lot differently. You'll have a much different approach to your trade setups and probably a lot more accuracy, guys. So make sure you study this topic. So just a key takeaway for the beginners, right? When most traders get into the market, they look at, okay, I have a resistance here. I'm going to sell at that resistance, right? And then market spikes up. And what does it do? It creates your movement after. So a lot of times it's waiting for the market to close back below your resistance, watching the candlesticks. Understanding liquidity, candlesticks, and price action will help you out a lot. Same goes for a support. A lot of traders make the mistake of, again, the market coming to a support and they're buying, and the market goes down. And what does this do? It creates a big emotional cycle in the market, because now traders who are originally buying are thinking, oh no, price is going down, I gotta sell. It's a trap. Think about it like a trap in a way, because anyone who was originally buying here might see, oh my gosh, price is dropping. I was wrong. Now I gotta sell, maybe jump into the sells, right? Quickly to get reversed on. So why does this happen? Liquidity sweeps often happen, guys, because the big institutions, the big players, right, they need liquidity to create these moves, right? So big institutions need to grab liquidity to fill their large orders. They got much larger orders than us. So by driving price into areas of resistance or areas of support or underneath and above them, they can grab these stop loss orders that exist. They're pretty much looking for areas where they know, again, there's going to be a lot of stop loss orders existing. Think about whenever you've gotten stopped out on a trade and then you look at it the next day and you're like, oh my gosh, I should have held my trade, or I was early. You got to look at that moment of, I was early, because mainly if that's happening to you, you probably were in the sense of liquidity spike and way too early on price. You got to time things more. So I hope this video helped you guys understand the concept of liquidity maybe a bit more. It's not everything. I teach some more concepts that I know and that I stick to inside my daily webinars throughout the week. This is definitely a good topic to study for any trader. Think of it like this too, guys. When you have market structure, what is support and resistance, right? Think about market structure in the sense of liquidity when you're making higher highs and higher lows in an uptrend. When the market pushes higher and it goes through a high, that's pretty much like the market grabbing liquidity too as well, because most traders are going to be selling at that resistance point. Same for a downtrend. If the market's in a downtrend, right, what's going to be happening when it's coming back to a low in a downtrend? Most traders are going to be buying at this low. So usually you get a reversal after these points when it comes down to liquidity, even in trends. So you can have them at downtrends. You can understand liquidity and market structure in downtrends. I'll be sure to do another video on that for you guys on the channel. Maybe stay tuned for part 2 on this video. So this is something you guys got to pay attention to. Study this topic. I hope you guys enjoyed it. Thank you guys for watching today. Be sure to leave a like on this video or a comment if you guys have any questions, and I'll try my best to get back to you and answer your question. I'll see you guys on the next video. Peace out.